If you have gold, I can shoot you and take your gold. If you have Bitcoin, I can kill you, but I don't get the Bitcoin. Right. And so it is a state change difference in the economic vitality of an individual, a company, a family, a nation state, the human race. And so that's why all of us in the crypto community, we really we revere Satoshi, and we think about the world before Satoshi and after Satoshi, because before Satoshi, everything you owned was subject to the permission of someone more powerful than you. And after Satoshi, after January 3rd, 2009, you could own something for yourself that no one can take away from you, and that is what's caused the entire 750 million person crypto movement.
Hey everyone, and welcome to Everyday Finance. The price of Bitcoin just dropped below $104,000, which is one of the biggest drops in the cryptocurrency market in recent months. There have been liquidations worth more than $1.3 billion because of this. Because of the speeding up of the sell-off during European trading hours, over $1.2 billion worth of long bets were lost in just a few hours. There were forced liquidations worth a total of $377 million that were only due to Bitcoin. Another $316 million was due to Ethereum. A huge long position of $47.8 million BTC was taken on HTX, which caused the biggest single wipeout. Analysts say that these liquidation cascades often mean that people are selling in a hurry and sometimes mean that a bottom is about to form.
The world's first example of a technology that allows individuals or corporations to tightly bind economic energy to their person. Like, if you have 100 families and they all have some money, but they don't trust each other, they don't trust their bank, they don't trust their government, they don't trust any company, but they want to keep their money. So they come up with the idea of a digital bank. You write it in software, and the digital bank has 21 million coins, and anybody can buy any amount of the coins in the bank, and that becomes their bank in cyberspace. Now, the question is, who runs the software? Well, I might trust you, but I won't trust your great-great-granddaughter. So we all run the software. Everybody runs the software, and then the software continually cross-checks everybody else. And so it's a very elegant, decentralized way to create a property network or a decentralized banking network. It's a protocol for economic prosperity, right? So it's like you speak English, I speak English, we can communicate. You use Arabic numerals, I use Arabic numerals. We could do math together. When you offer me nine bananas, I know what 9 is, right? Because we both use the same numbers in the same language. Well, what if we want to trade together and we don't want to rely upon any government or any bank, and we want to do it for 1,000 years? So Bitcoin represents that breakthrough. It's the first time in human history that an individual can own anything without asking the permission of someone more powerful than them. If you have 1,000 Bitcoin and you have the private key, nobody can take it away from you. You can carry it with you. You can send it anywhere on earth. You can take it with you to the grave. You solved the problem that the pharaohs in Egypt couldn't solve. How do you take your money with you, right? So that's a big idea. Let's just call it a bank in cyberspace where you put your money and no one can steal it. And it's currency in the sense that there's never going to be more than 21 million. So when you buy a Bitcoin, you're buying 1/21 millionth of all the money in the world forever. That's the idea. What do we call that? I call it the world's reserve capital network, right? It is capital. What is capital? Long-term store of value. You're a rich person. Where do you save your money for the next 100 years? Not in a currency. You don't buy pesos, you don't buy euros, you don't buy the US dollar, you don't buy the yen. If you're a rich person and you want to save your money for 100 years, you're buying equity, private equity, public equity. Maybe you're buying scarce desirable art. Maybe you're buying real estate, commercial real estate. So the capital assets of the 20th century were like the S&P 500 index or New York or London real estate, or maybe sports teams if you're lucky enough to be able to buy one. But what Bitcoin represents is digital capital. right? If I have a bank and it's a network, a bank, I can move the money. I can move $1 billion from here to Tokyo in a few minutes. So then that way it's a network. But it's also capital itself. If I gave you $10 million and I dropped you in the middle of Africa, and I said, buy anything you want, buy any equity, buy any land, buy anything, buy any bond, buy anything, but you got to keep it for 30 years in Africa. Or I said, or you could buy $10 million of Bitcoin, and by the way, you can send it to Singapore or London or Paris or New York in 2 minutes from your phone. Mm-hmm. I would submit to you, there's not a single thing you would buy in Africa. There isn't a capital asset that you want to give to your family or your great-grandchildren. The same is true if you actually talk to people in China. They don't want to keep their money in China. There's a law against removing it from China. Mm-hmm. In Russia, in Ukraine. If you talk to Europeans, they don't want to have their money locked down in any country in Europe, right? They want to have their money. Where do people want their money? They want it in the U.S., right? How about Brazilians, Argentinians, Venezuelans? Most of the world doesn't want to take all of their family's wealth and store it locally in real estate, local stocks, local currency, local banks. That's why there are laws against them removing the money. And the problem with gold is if you have all your money in gold in Africa, you can't take it through the airport. You can't take your, if you have all your money in gold in Argentina, you can't bring it out of the country. So the value of Bitcoin is it's digital gold. So if you have your family's assets in Bitcoin, you can take it anywhere you want. No one can stop you from removing it from the jurisdiction. And the more insecure you are about the country you live in, the bank you do business with, the nation state you rely on, or your economic future, the more desirable it becomes. So in a nutshell, Bitcoin represents property rights for the human race. It represents economic prosperity, and we'll call it colloquial digital gold, but it's 100 times better than gold. You cannot teleport gold from here to Tokyo with the blink of an eye, right? And if you have gold, I can shoot you and take your gold. If you have Bitcoin, I can kill you, but I don't get the Bitcoin. Right. And so it is a state change difference in the economic vitality of an individual, a company, a family, a nation state, the human race. And so that's why all of us in the crypto community, we really we revere Satoshi, and we think about the world before Satoshi and after Satoshi, because before Satoshi, everything you owned was subject to the permission of someone more powerful than you. And after Satoshi, after January 3rd, 2009, you could own something for yourself that no one can take away from you, and that is what's caused the entire 750 million person crypto movement.
Bitcoin has already lost 17% of its value since its a time high of $126,000. And traders are focusing on the psychological and structural support to the upside at $100,000. A few people think that this level is the line in the sand for bulls, and they warn that a clear break below it could mean the start of a more serious bearish phase. People think that taking back control of the $105,000 to $107,000 range is very important for keeping the trend going. At the same time, the strong US dollar and the loss of several support levels make it hard for buyers. This adds to the idea that Bitcoin is moving into what financial experts call free fall territory.
One was the approval of spot Bitcoin ETFs in January of 24. And that sparked the explosion and the explosive success of IBIT, which went from $0 to $100 billion in less than 2 years, and it's the most successful ETF in the history of Wall Street. So that was a big deal, the endorsement of the SEC. The second big deal was the red sweep in November when you had a pro-crypto, pro-Bitcoin administration. We went from one supporter in the cabinet, Gary Gensler was a Bitcoin believer, 1 out of 12, to all 12 cabinet members, the president, the vice president, the head of the SEC, the head of the CFTC, the head of the Treasury, the head of Commerce, the head of, RFK, the head of, of the Housing Authority, Bill Pulte, Kelly Loeffler, and Howard Lutnick. So you all of a sudden have 12 positive cabinet members from one, and that was a big deal. The third big milestone was FASB's adoption of fair value accounting for crypto assets. Before that point, and that took place at the beginning of this year, beginning of 2025. Before that point, if you're a public company, you could mark down your losses on Bitcoin, but you could never realize the gains. Right? It's literally an asset where you could only lose, you could never win. Right? So the entire accounting rule was a deck stacked against you. And so fair value accounting meant that our equity, for example, went from $3 billion to $50+ billion in 12 months. Right? But if it was not for fair value accounting, we would still have $3 billion instead of $50 billion. So that was very prejudicial and hostile accounting, and that flipped in January. I think the fourth big milestone is all of the pro-crypto and pro-Bitcoin guidance that came out of Treasury, the OCC, the FDIC, and the Federal Reserve. And the key point there is most banks in the United States and the rest of the world were afraid to custody Bitcoin. They were afraid to lend against it. They were afraid to do business with it under the previous administration. And I think the guidance that came out of the current administration delivered a message, which is not only is it safe for you to custody and extend credit against these assets, it's really imperative because the United States wants to be the crypto capital of the world, and we want to lead in digital assets, and that means our banks need to lead in digital assets. So that you can attribute to the President and to the Secretary of the Treasury, Bessent. I think the next thing was the passage of the Genius Act, championed by Senator Hagerty, and that created a stablecoin environment in the United States. And the idea there is, why can't we tokenize the US dollar and ship $1 trillion of it to the rest of the world, or maybe $10 trillion of it to the rest of the world? Because money wants to move at the speed of light, and this is the critical part of the crypto ecosystem. So the last two banks that moved crypto dollars around were Silvergate and Signature Bank, and they were assassinated by the previous administration. They were shut down on a weekend for no good reason. They were perfectly well capitalized, and they were literally murdered by regulators. So you can imagine that the banks were afraid to get involved with crypto under the previous administration. You know, getting a supportive White House, a supportive cabinet, a supportive head of the Treasury, and then a law that says that it is legal for you to do this, I think was pretty important. Then that has resulted in an avalanche of institutional adoption, and now you have companies like JP Morgan, right, and Bank of America, and Wells Fargo, and BNY Mellon, and PNC Bank, and Citi, that are all announcing their support for this asset class. And if the trillion-dollar banks are willing to custody, and they're willing to extend credit, and they're willing to handle the asset class, and they're willing to bank the crypto industry, that's really the necessary condition to 10x from here. Like, Bitcoin got to 100,000 without their help, but getting to 1 million requires the banks to bank the asset. And so the next 4-year period is really about banking Bitcoin and the support for digital assets in general by the major establishment of bankers in the United States. And everybody else in the world, right? You can imagine the bankers in Australia, Canada, Singapore, the Middle East, and Europe, Mexico, they all follow the U.S. banking standard. And so what you have is an avalanche or a sea change here, and the headwinds have become tailwinds. I think it's a $2.5 trillion asset class that's been unbanked. So imagine that you started a company, NVIDIA, and you gave 90% of the stock to the employees, and they went from $1 to being worth $3 trillion, but no bank would give them a loan against it. So you're an employee, you've got trillions of dollars of capital gains, but no one will give you a nickel loan against you. You cannot get a loan. You could post, you have $10 billion of Bitcoin, you can't get a $1,000 loan from a major bank right now. So what happens is the OG crypto holders, the ones that actually had the capital gain, the only path they have the liquidity is to either rehypothecate the Bitcoin and it gets shorted in the market, or to sell the Bitcoin. So I think we're working through a period where 10% of the supply, or it wouldn't. what percentage of the equity in your big tech company would be sold by employees, when they all got insanely rich? Probably 10-20%, right? They would sell at least. So we're waiting for that to boil off, and we're at the point where everybody knows that Bitcoin is digital gold and it's got institutional acceptance. But banks are very careful, bureaucratic, and process-driven creatures, and they should be, right? I mean, if banks get out of control, right, there's hell to pay. So I think it'll take 4 years for the conventional, traditional banking establishment to get spun up, where they're custodying the asset and they're extending credit against the asset. And it's worked its way into systems, right? I mean, Bill Pulte has directed Fannie Mae and Freddie Mac to start to recognize this as good collateral, but how long will it be before you can post your Bitcoin as part of your conforming loan collateral? And it's a government, quasi-government type agency, and the credit rating agencies, they're starting to cover us, like we just got covered by S&P. But how long before they acknowledge Bitcoin as collateral or capital that's just as good as holding a share of NVIDIA stock or Apple stock? And I think, reasonably speaking, that's a 2 to 4 year adoption curve. So between 25 and 28, the traditional finance infrastructure to bank and collateralize and issue credit against this will come online. When that happens, if you think about every asset class, if you can't get a loan to buy a car, and if you can't get a loan to buy a house, what happens to car prices and house prices? Right? At the point that the credit market forms over the asset class, the prices move up. So what you see right now are the bank credit markets, the corporate credit markets, right, and the public credit markets are forming on top of Bitcoin. And as they form, that's going to be very positive for the asset itself.
Short-term users are losing money because many of the coins they just bought are now worth less than they were bought. The company Glassnode says that this kind of giving up usually happens during strong accumulation windows, which is when long-term investors start to quietly take part. The story is driven by fear in the short term, though. Trader Ted Pillows says that Bitcoin could soon test $100,000 again and then fall to a futures gap of $92,000 if people keep selling. This is what will happen if the current selling trend keeps up. At this point, everyone in the market is holding their breath while they wait to see if Bitcoin can stay above the six-figure level and avoid a bigger drop.